Well, hello, members. It's June 5th. It's the weekly review. Welcome to the show. We're going to take a quick look here at what's going on, try to figure out what's happening with these markets and what they're going to do next. So, we got a lot happening in terms of news. We had news on Friday that kind of shocked the markets. We'll talk about that. We got the Fed next week, which is probably going to be the focus even this week on how this trading trades out. Now, last week, the markets were up pretty big, right? They'd had a pretty big gain into the end of the week, and then they gave up a lot of that on Friday. The Russell was the leader all week long, ended up higher than everybody else. If you look at the gains, losses on the year, slightly up, slightly down. It's not a big deal either way, but on average, the markets are higher, not lower. As to the big event last week, it had to be the shocker Friday surprise on the unemployment number. That expectation was 150K. They did about 38K. Even though the employment numbers went down, the overall number of people being employed went way down compared to what was expected. The result was swift, right? We saw the indexes trade lower with a good push down in the S&P, but by the end of the day, they end up with those long tails one more time, just telling us that the underlying strength, the desire to buy this market, not sell it, continues to be the same. So you have 3 bars in a row now where they try to push it down. Each time they can't take it down. The one thing we've been watching, right, we talked about it last week, we'll talk about it again here, is that this key number up here, which was the breakdown bars high on the weekly, this bar here, it's about 2103. We got over it on Thursday, stayed over it on Thursday, but by Friday we had given it up again. We traded it back underneath it, closed under it, 20.99 on the close. So that bar continues to be the main resistance point, the main focal point, if you will, on this attempt to get all the way back up to the all-time highs. We're not that far away. They keep trying. They don't want to give it up. That's what the daily chart keeps telling us. Surprise after surprise, it doesn't matter. This market keeps up here to highs. Now, if you think about the Fed and what the Fed is doing or wants to do, the Fed would like to raise rates, but the Fed has this good news, bad news, it doesn't matter, because the market reads their intentions as if this market, or not the market, but if the employment numbers, if the economic numbers, if they don't turn out good, then the Fed has got your back. They're not going to raise the rates, which means things can continue on, right? We're not going to have a recession. If things do heat up, if the economy gets better, then the Fed is telling you we will slowly, very slowly, just inch the rates up, and the economy is going to continue to do well. And so it doesn't matter what the news is what the Fed keeps telling the market. We're going to protect the market, and the market's going to work its way higher no matter what. And right now, the reflection of what the market thinks is exactly that. We're going to be able to work higher. We don't care about the bad news. That's why this market will not break down. Now, the thing that we should keep in mind here is that if we do find a case where the market wants to break down, we're starting to build a huge ledge down here at the bottom, right? This ledge is becoming more and more intense, and so what's happening is anybody that's long is using this area now as the protection point. In other words, if the market were to come back down here and to break this, then you would see nothing but air up underneath. So it's definitely something we have to watch. Now, on the flip side, even though I don't think it can do the same sort of a breakout and run on the top side, you still have the same thing on the top side. In other words, if they get over this swing point high and that swing point high and this swing point high and this one, right, you got all of them lined up on the top side. So just as we have all these on the bottom side in this area, we have them on the top side too. And so a breakout up here likely carries, even though I expect it will retrace right back down into it once it's done, you've got to believe there's a lot of stops sitting up here as well. And so any kind of a breakout is probably going to get a continuation push and then some sort of a retrace, and that retrace is going to be the key as to whether another large leg can pursue. And so that's going to be a critical area. Once it breaks out, once it blows the stops out, does it come back and hold and continue up? or does it give it all up and come right back down? My expectation is it will give it up, but I don't know that. We never know that in advance. We just have to know what the scenarios are, watch how the market reacts, and then decide what to do about it. So in the big picture, that's the story. That's what's potential large movement on a larger scale, right, up or down. If we look at what happened on the dollar, on the other, ETFs and so forth, when we had this employment number Friday, we got a huge shock to the system, one of those unexpected events which changes things near term. The dollar, of course, had the most obvious reaction. Dollar gets sold off hard, volume expands. Dollar's going to come back down and test this bottom. And if we look at it on the weekly chart again, that bottom was these swing point lows that it tested once before. And so the key is going to be is what does the dollar do as it comes to the bottom of the range, and what does the Fed do as the dollar comes to the bottom of the range? Because the Fed and the central bankers around the world are in a quandary as to how do they, who gets punished and who gets rewarded. If the dollar wants to run to new lows, the euro, the yen, they're all going to go up. That's going to hurt the European market and hurt the Japanese market. So the large established markets are going to get hurt. On the converse, if the dollar plummets or pushes lower, you're going to see emerging markets benefit from it. You're going to see China benefit from it because it's pegged to the dollar. And so it's like, who do you want to hurt? Who do you want to help? Are you going to help China? Are you going to help the emerging markets? Or are you going to help the industrialized, markets of Europe and Japan? And so as we get back down into this low on this next trip down, the Fed meeting is going to be taking place. So I expect we're going to push right into this area on the Fed meeting, and then it's going to be what does the Fed do and how do they say whatever it is that they're going to do, how do they communicate whatever it is they want to say. This time we don't have a Yellen press conference afterwards, I don't believe. I'd have to check that to make certain, but I don't think we do. So they're going to have to communicate it in their statement. And we do have Fed speakers, of course, afterwards. In particular, we have Yellen the week after and the week after that. And so the next 3 weeks all are going to have, not this week, but the following 3 weeks are all going to have a lot of Fed news in this arena, moving this market and moving what's going to happen with the dollar next. And I think that's going to be the key over the rest of this month, basically. If we look at other things that were affected, right, all things commodity got a big push, and they got a big push to the top side. And from my portfolio, from what I keep talking about, just my message in general has been that commodities all look like they're breaking out. You see, if you look at my portfolio, and in case you're not aware, I know there's new members out there. In case you're not aware, let me show you where these things are just to make sure you know how to get to it. If you come to the site and you come to the tools, the choose tool, if you got the watch list and all these things, you can come to this area. But to see what I'm talking about, just come to my little area, Trade with LA Communications, the chat rooms. In the chat rooms, I have all of my thoughts in a condensed form presented to you on a daily basis. If you click on that and pop into it, in this area here, I talk about the trades that I think are worth doing. I put out these videos on occasion when I think it makes sense. I've been doing these cradle to grave trades now for about 2-3 months. As I'm on the road a lot now. I don't do them quite as often, but when things happen, I do pull these up, and I use this to explain neoclassical and to show you what I'm doing in the trades. There's a history that you can go back and look at, the logs. If this scrolls off and you can't get back up far enough, just come down here, go to the history, and in the history you can see the entire set of logs. I've got my private Twitter if you want to get emails or Twitter updates anytime that I make a trade. I can do that. You can do that by subscribing. But down here is the portfolio with the performance and the details. If you look in the performance itself, let me bring that over. It's a little bit small here, but Let me blow it up a little bit so we can see it better. Here's all of the trades that have taken place. And I think I clicked the wrong one. This is the trades that have taken place. Let me click the portfolio. Click on the portfolio instead. Get a list of that. We can see what that portfolio looks like. And let's blow that up so we can see it. Get it back over here. And there it is there. And we can see, what's in the positions that we have. And you can see that commodities is where I've been focused. Just a couple stocks, but mostly commodities. And the reason for that is I suspect that commodities are making that long-term turn that I've talked about before. And so if I bring back up the notes, one of these long-term things that I've talked about, long-term themes for the year, is that the commodities were probably making an intermediate term bottom, or potentially a long-term bottom this year, and eventually going to go much higher. So if I come back to the charts themselves and we look at the commodities, and in this case we're looking at just the continuous commodity ETF, which is basically an ETF that covers the futures markets across all the commodities. You can see this large range being broken on Friday. If you look at it on a weekly basis, you see the same sort of thing taking place. Let me grab the weekly. So here's the weekly. It's a breakout. If you're into the classical stuff, you can see kind of a cup and handle thing going on that people talk about. I don't pay as much attention to this, but it's sort of a cup and handle thing that's going on here. But it's breaking over this area, right? It's going after the swing point high. If you get over that swing point high, you're going to go to the next volume bar, which is up in this red zone, and that's a pretty good push on a weekly basis. Right? And then if you bring it back to a long-term basis, right, this is a long-term chart. And on this chart you can see that we've made some sort of an attempt at a bottom here. We've actually got a small range that has been carved out now. It's about 3 points on this. That's about 17% already, right? And that's just a little bump up. Now it doesn't mean that it's turned. But looking at the daily and the weekly, you're getting the sort of action neoclassically that's telling you it probably is. This is the big bar it's going to attack next. It's right at it. It's going to try to get into it, and then of course it will try to get to the top. The top of that is about 22, so another 2 points, another 10% almost. And that's not even getting back to the swing point low. That's way up here at 25. So in other words, this could move another 20%. 20-25% just to get back to a bearish retest regen, which I think is probably likely over time, and that's on the general commodities. If you go into some of the specific commodities, and we can do that easily by going into the watch list. I've shared all my public watch list. You can have public or private, and I've got many of them shared with you, like auxiliary markets. And if you look at the auxiliary markets, a lot of all the kind of currencies, gold, silver, the bonds, the gold, the commodities, other commodities like copper, junk bonds, all that stuff's in here, and it's all shared with you. It's easy to find. Emerging markets, for example. But I wanted to show you some of the other commodities that have already made big moves, and things that are related to commodities like agriculture stocks. MOO, which is an ETF that covers things like John Deere and Caterpillar and other stocks like that. This one's breaking out. Anything related to commodities with the Fed in this quandary of it can't raise rates, they're benefiting. And that's what's going to keep the S&P in general strong. We may see other sectors of the market weak. That will be something to focus on, like does tech start giving it up again, or can it continue its move? And so as we look into this space, we get a good idea about what's moving in this market. Anything commodity related, anything bond related is moving. And you can see that with bonds breaking out on the daily chart here, on the weekly chart going after that large swing point high now, breaking on a weekly basis. This is a breakout on multiple time frames. This should carry to the top. A good trade would be to trade the bonds. If you want to make a short-term trade, to trade the bonds and capture, in this case it's about what is it? What do we got here? 33. It's about 2 points. So you can capture 2 points on a buck 33. All of these trades, they're available, right? They have the setup, and it's all a result of what just happened with the employment numbers and what's going to carry probably this next week in the vacuum in front of the Fed. So getting back to the notes here real quick, the dollar drops, right? The rate hike expectation is gone. The commodities, anything commodities, is going to get a push. The bonds we just looked at. Asia should be the beneficiary like we just talked about. So we should see, for example, those emerging markets we were just talking about. We should see the emerging markets move. And if we pop up here, you'll see they took a spike up on Friday off that news, right? They're going to try to run up, close this gap, and run up to this high. So you could trade the emerging markets this next week on the vacuum in front of the Fed and off the momentum of Friday's move. Finally, Japan and Europe shouldn't benefit. They should go the other way. If you're there or if you want to short, that would be the place probably to look. On the sectors, the financials get hit. And so if we take a look at the financial stocks, if we take our watch list, go to the sectors that I have shared with you. I'll pull up the sectors here. Go back right here. I'm sorry, I'm already in the watch list. Just go to the sectors. You get the major sectors. The XLF is in that sector. You can pop down here, look at the XLF. XLF has come back down. Now it did get a little hammer reversal, but huge volume. That says it's going to test that low again. If you look at the subsectors like the KRE, for example, if we go to the subsectors, KRE, KBE, all of those are going to get hit or should get hit, and that's going to put Russell in not jeopardy, but pressure on the Russell. So you can see it here, huge volume, money coming out of these, right? Money had come into these over this whole move, thinking that the dollar was going to move up, was going to benefit the banks. Reversal. Now, for the next week, they're probably going to be under pressure. So you can see how all these things fit together. You can see it starting to take place on the charts, and the fact that the Fed is about 7-8 days out, trading days, you're going to see these markets in that interim start to continue these moves that began on Friday in most cases. Commodities is going to be super strong. The oil's a little different because oil now is around $50. $50 is kind of the break point where people start putting rigs back into play. And so you actually had a rig count that went up on Friday. That's going to probably put pressure on oil, even though the dollar would help it going lower. Oil's going to have some pressure to the top side as a result of that. Of course, oil moves on a lot of other things like all the nonsense and noise that keeps coming out of OPEC. The safety sectors, right, they're the ones that have the yield. So the XLP, the XLU, they're going to benefit. The XLV, even to some extent, will benefit. And so if we pop over and look at those again, right, you'll see, going back to the major sectors, you're going to see huge pops up and probably a continuation in those sectors, because they pay dividends, and you can't get dividends in bonds anymore. So what do? You shift over to these. Here's the XLP. If you look at the XLU, it's the same thing, right? Let me just type it in. But all of these are shared. It's easy to get to. You can see what they are. You can see them on all time frames. Just set these charts up on all time frames, and you'll be able to see them. As a matter of fact, if you haven't done this or unaware of this, if you come into this and you hit, display, show all charts, it's going to pop up this little window. You can arrange these windows wherever you want them, and then you can click on Save the Current Window Locations, and the next time you come in, you'll see them all in the same place. So you can arrange them on your screen and save that for future viewing and get your windows to show up in the same place. And another thing, don't use Microsoft, Windows IE, Internet Explorer. It has way too many bugs, can't support it. Use Chrome, use Firefox, use Safari. Those are the major three you should be using. ETFs we've kind of talked about here. You've still got real strength in these. I think these are the key ones to watch this week. Does the strength continue to be in tech or not? I think that's the key thing that we can watch on a weekly basis this week to give us some idea of whether this market's going to continue higher or not. Surprises, they never sit well, right? Wall Street doesn't want surprises. They just want slow, methodical. I know what's going to happen. They can take it up. They didn't get that this week. Last week we got exactly what we thought, which was consolidation base building. This week, the best case would be a pushback to all-time highs. I think that's unlikely. Worst case, you just drop and, this whole move up just gets dropped. And we've seen, in the past, we've seen evidence of this potential to take place. If I go back over here to the today, I'm actually showing you how to get to all these things you usually don't see. But if I go back to the S&P 500 and pop it back up, we've seen on a weekly basis before when we looked at this prior, right? This whole action that we saw the last time we came up and consolidated, we saw hang just like we're starting to do here. Does this look familiar? It's almost the same scenario, right? Although it took it a little while here to come back down instead of a thrust down. Now you're getting the hang up here in the attempt to take it higher. Are we going to get another thrust down? Are we going to get this consolidation play out and then eventually drop again? What happens in these cases, right, is you build up stops and then a breakout either way gets a faster move. Well, we're starting to get the consolidation at the highs, which is going to do the same sort of thing. A breakout this way or that way is going to get the larger move. A breakout underneath those little lows that I was showing you earlier on the daily will get you the move down to this area. Again, build out a consolidation area and eventually break it one way or the other, and that's going to be the next bigger move. Large drop would take us back to the 2050 area, so going back to the daily chart here, the 2050 area is back into this area here. So on a daily chart, if we came back into 2050 or so, this 2020, I don't think we're going to drop underneath that, but we could drop into here. What's the most likely case, in my opinion? Probably get back to that May 10th bar and trade into it and try to do a retest regen off of this bar. Now, the good thing now at this point is this particular bar, this swing point high, as it was broken on this bar, this green bar, that green just tells you that the volume was heavier versus lighter. As it broke out there, it hasn't tested. And now you have 6 bars, right? It's gone 6 bars across now. So the first test into it should not get too deep, right? It should hold in the top third of it. That's generally what happens. And so a test into this bar would also probably be a test into that wide price spread bar. And so this price point, that price point is the one I think is in play this week. If we look at the top of this bar, it's 2080. And 2080, this was 2090, let me see, 2084, 2085, 2084. I think that's the general area that this pullback is going to try to get to this week. If it can get a little deeper, maybe test even the bottom of this, which is not the likely case, but possible, 2062. Any of that area there is probably where the consolidation could trade back to this week, probably. I think that's what's going to happen. So that's what I'd be looking for this week. Fundamentally, you got a lot of industrial production numbers. Outside of that, it's really the FOMC next week, and then the Yellen speech is the week after and the week after that. And I think that's where the focus is going to be. That's it for this week. Thanks for joining me. I'll see you next time. Goodbye.